Good morning. Welcome to the XM.com weekly market update, and we're joined once again by the CEO of XM, Peter McGuire. Pete, welcome back.
Good morning, Andrew.
All right, let's start domestically. Last week, the Westpac consumer confidence number came out. It was up 3.9%, which was a little bit of a surprise considering
better than expected.
What's going on in the market. But maybe the interest rate numbers haven't, or the interest rate increases haven't flowed through fully just yet.
Yes, exactly right. And when you're seeing that, I mean, it was a strong move considering we're at 81 and we hit 84. So let's hope that we've turned something, but time will tell.
Yeah, and once again, those interest rates are they're definitely a bit of a
lagging.
Yeah, it's a lagging sort of indicator, but they do take a while to really flow through. Yeah, so you would suspect that consumer confidence number could potentially go lower in the coming months. Once again, because of the interest rates, Aussie dollar is now sort of in that 67 sort of range, so it's struggling a bit.
Yeah, it can't seem to move from it. Kiwi was under 60 yesterday, so that gives us an idea. We're in a downtrend, and that US dollar is king dollar.
Definitely is. So
and weak Chinese.
Well, and that's got a big impact on the Aussie dollar as well. So that lack of demand, if you like, coming out of China.
Yes.
Let's head up to Europe. There's a lot of activity, not only in the UK, but in Europe at the moment.
Yeah.
Germany, the energy crisis there is really taking its toll.
Yeah, absolutely, and it really hasn't started to bed in. Electricity prices have, and gas prices, but the cold winter hasn't bedded in.
Not yet.
And you give it another month and it starts to get pretty cold up there in Germany. So, yeah, you're talking about economic activity, having a look at what's going on with the charts, and of course the big manufacturing, motor vehicles, you name it, everything's produced in Germany, and they say it's absolutely hemorrhaged.
Yeah, and you would assume it'll fall, if not already there, fall into recession pretty quickly.
Oh, so, yes, fall into a big heap.
Yeah, certainly will. Once again, the energy, the gas prices, you look at this chart where, you know, that was sort of flatlining for like roughly 2 years there, and all of a sudden it's
off to the races.
Certainly is. So.
You know, the US Henry Hub, I look at that, but I look at that Netherlands, and you really get an appreciation what impact it's having to the consumer, and it is showtime. I mean, you've gone, have a look at that. We got energy bills, it's up 25 times in France and Netherlands. And imagine when you're starting to really try to heat your home. Come Christmas, mate. There's your Christmas present, kids.
That's right. No, it's very...
You've got a warm home.
Tough going there at the moment, that's for sure.
Yeah.
Over to the UK, obviously there's been a huge amount of focus on the UK because of the Queen Elizabeth and whatnot. So, but the CPI data came out. I think even though it's still a big number, people were expecting it to be over 10% again. But at 9.9, there's not much consolation there.
No, there's certainly not. It's a short half head from 10. So I think that it seems to be, hopefully consolidating, but, you know, energy prices and everything moving forward, it's going to be a tough, bleak 6 months ahead for UK.
Yeah, and definitely rates will have to go up significantly there to try and rein that in.
Well, I was just seeing something, and I spoke to you off air. Argentina just posted their inflation 100% and their cash rate of 75%. So we spoke about Turkey last week at 80% inflation. Well, there's Argentina that's beaten it. No. I think there are 19 central banks looking at rate decisions this week. Yeah. So the likes of South Africa, the likes of some of the African nations, South America. So it's not just the big four that are looking Fed, Swiss National Bank and of course the BOE. But you've got, you know, major impacts across the whole world.
Certainly do. But a lot of the major economies as well, the interest rates are still very low in historical standards.
Yes.
And you would still consider that stimulatory to a certain extent.
Oh, yeah.
So that's why they're all going, heading north, that's for sure.
Yeah.
The pound, once again, has copped a bit of a beating. It just continues.
Well, yeah, it's been dynamic to trade really since that February-March sort of period, and it's been one-way traffic. The analysts are saying we've got under 115 now. It was 114. I was looking at the screen yesterday. We're saying 112 to 110. That's what the analysts are saying as your new headline number line in the sand. And it's too hard to forecast out. Are you going to see a 105? I've heard speculators say you're going to see pound for dollar. But, you know, the 112 to 110 is a real headline, like we had the 145 for the yen. And we hit 145. The US dollar index was at 110 yesterday. It's taken a bit of that steam out. But yeah, big push down, man.
Yeah, it certainly is. Over to the US, Fed funds. Now, it's like they've basically certainty 75 basis points.
You bet.
And now there's talk that do they go for 1%?
Yeah, exactly. I think it'll be 100. We're saying more than 25% now. It's saying closer to 30, 32% are saying it's going to be 100 basis points. I'm in that camp. I think they've really got to put pedal to the metal, but we'll just have to wait and see. Yeah. I know it's a bold rise, 100 basis points, but that just shows the fragility and what's happening with inflation out there, because they're trying to, at their best, try and get it under control, and going to be interesting whether they can, Andrew.
Yeah. And the sentiment that's coming out of the Fed as well is still quite aggressive in what they're sort of saying. So I think they're obviously trying to talk the market down a bit, but they've obviously got to back it up with
action.
Yeah, and that's
it's like a liver punch from Tyson. You know, you hold your hands up and all of a sudden he whacks you in the liver and you buckle down. That's what that 100's going to be, we'll see if they get a couple more by Christmas. Yeah.
And I guess it's if they think they're going to get to a point, whether or not that's 4% or whatever it is, do they just get there quickly?
Well, yeah, and you've got to, but the trouble is, do you rein inflation in? And that's the major concern. Everyone's saying, do you enter that stagflationary period? And that is just chaos, where you've got negative growth, high inflation, and you can't put any lever that you touch impacts the final decision, and that's the most damaging and dangerous.
Yeah. Time will tell.
Time will tell.
And we had the CPI data out last week, which was off slightly, but the market was definitely hoping for something in the 7s.
Yeah, we certainly were, and there it was at 8.3, so that's why the Fed have got to be aggressive. And, you know, when you look at that line, I just sit here and look at the opportunities we've got across the currency markets over the next couple of months, and I think it's going to be dynamic. Don't forget, we're less than 50 days out now from a midterm election, and that's going to be incredible what happens there. If the Republicans were to get the Senate and Congress, man, then it will just be mayhem for US politics.
Yeah. I know, interesting couple of months ahead.
Oh, mate, strap yourself in. This is fun time.
And finally, you've talked about the King dollar, Pete, many times.
Yeah, it is the king. It's the king. And there's no one, Andrew, that's even close to the power of it, because Euro got crushed, Yen got crushed, Aussie's crushed, Kiwi dollar was under 60, it's crushed, Canadian dollar crushed, and the dollar, the only one that's doing well is the Russian ruble. If you're looking at that, incredible, absolutely on fire. So the old US dollar, gold's off. I noticed that. Really they're holding it underground. Underwater, I should say. So dollar, I think there's probably more momentum. That US dollar index at 110, we're now saying, well, the market's saying 112 is the new number, 113. So maybe it's got that. Just to let you know, I think it was 2001, after the World Trade Centers, and I think it hit about 119, that US dollar index. Yeah. So we're heading towards those real historical highs.
And once again, if their interest rates are going to be significantly higher than others, then the money's all flowing one way.
Absolutely. So. Be interested to see what happens as far as equities. We've got earnings season coming up in another 5-6 weeks in the States.
Close to that.
So that's going to be how they perform.
Yeah. Well, you would sort of think everyone thought the earnings season just passed was the one that was going to get hit the most.
Yes.
That was pretty good. The numbers were pretty good coming out of that.
Man,
so
the market went berserk.
Yeah, so you would sort of think, do these interest rate increases start flowing into the profits and the earnings of those companies, but also the stronger dollar, particularly those larger companies where they earn a lot of their money offshore.
Yeah.
So it's a bit of a double whammy there as well. But yeah, once again, plenty of data coming out, plenty to watch over the next couple of weeks and couple of months. Very much so. Good stuff. All right, Pete, thanks again.
Good to see you, Andrew.
Great. And that's the xm.com weekly market update.